Hey everyone, hopefully having a good day. My name's Andy. My channel is Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. Obviously, I sprinkle in a bunch of my financial opinions as we go. So let's see what people are talking about. It's going to be commodity, financial, and or wealth building topics for the most part. That's what I like to cover. So that's what I cover. If you need any help with anything, check out finding-value.com. There we go. I'm going to be putting up a discount for those that are interested. There's a 50% discount on the first month of the monthly membership. And then there's a larger discount on the yearly membership. And it's in the description link below. This is Black Friday special. I think I made the discount code Turkey. Turkey. It's in the description link below if you want to check it out. And if you want to follow me on Twitter, it's at finding_finance. So we've got the great Martis. Gold, high probable play if 2000 breaks in the near term. Below 1954 and more work will be needed. Large cup and handle in play. So guys, I know a lot of people that get so worried about the short-term market movements. Even like the way he's wording this too, if it breaks 2000, if it does this, what I do is I look at it and I just look at the big picture view. Gold is in this gigantic cup and handle pattern. So then I think, well, what's the probability that this is going to break down and stay down, like actually stay lower, versus moving on up? What is the probability of it moving up versus going down and staying lower? The way that I always view these things is if it goes lower, it's only temporary. So one could conclude with a chart this large, and in my opinion, it's already breaking to the upside. It's just a matter of when is it going to go and how high is it going to go. And with the symmetry here, you can hedge yourself with time. You don't have to leverage up. You don't need to do options. You don't have to do any of that crap. You just buy it and hold on to it and forget about it. And if you're buying the physical metal, you don't have any counterparty risk. So if this does go to $2,500, $3,000, or wherever it wants to go, you can just hold it. Not that hard. The market conditions for gold to do very well is a late stage business cycle where things start to slow down. Now, let's say that's delayed by 2 years. Now, if you could get it for 2000, it goes up 50% 2 or 3 years from now, I think that's still a good bet. And it could go up more than that. It all depends on how money is flowing in the system and how much money the Federal Reserve is going to create if they're going to try to prop things up whenever that does occur. So I think gold, it's got a good chart. Long term, if you can hedge yourself with time, it'll be fine. And as long as you get like a 3-year window on it, it's going to do fantastic, I think. And there are leveraged ways to play this without going too far on the risk curve. We've got a trend spider here, XLE, energy surge incoming. It's a falling wedge set up with OTM call sweepers hitting the ask in the second half of this week. So he's put some data here in terms of call options that people have, but this is a falling wedge. To me, I think that energy could really bust out of here to the upside. Now, I know people are focusing on this wedge in the short term. What I'm doing and what I'm looking at here is and what I see in the longer term are these gigantic inverted head and shoulders. And if we get these breaks to the upside here, more recently, we could have a big, huge run. I don't know what's going to necessarily be the narrative behind it, because people always want to hear a narrative. They're gonna be like, well, what's going to be the catalyst, and what's going to go up, and what's blah 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 blah. It's like, guys, it doesn't matter what the catalyst is. Like, that's just like wanting to know the narrative, I think, is not what you want to be asking. The right question is this going to occur? What's the probability? And if we break it, what type of steps am I going to do? What comes out in the news is completely irrelevant. It doesn't matter why it broke out. And besides, half the time they just make up why it broke out anyway. They just make it up. They say, it's due to liquidity measures. Oh, it's due to QE. Oh, it's due to whatever it is. It doesn't matter. We want to be in it if it breaks to the upside, or we want to scale into it slowly and then buy even more when it breaks the last form of that neckline. So this is probably the falling wedge is kind of the beginning stages of a potential move. And what he's talking about here, I'm just going to draw it in. He's talking about this falling wedge here. That's what he's saying. If we break this to the upside, what I'm saying is on the shorter time frame, and I can draw it a lot better than that. Just, that's kind of what he's talking about here. But even if we break this, it's going to engage another longer term trend, which is the neckline here. And then we bust to the upside. The one thing I do like about this and the way I view it, you get the big three green candlesticks, and this selling pressure is just a flag pattern that's ready to break to the upside. That's all it is. And when it breaks to the upside, you're going to engage the neckline break, which then engages this gigantic move to the upside in a lot of these different patterns in commodities. XOP is not the only one that possesses this inverted head and shoulders. It's all over the place. Now, I know a lot of people are scared. They think a recession's coming. And I'll be honest, guys, I don't know which direction it's going to go in the short term. To me, the charts still look good to go higher. That is the overarching, overruling thing in the short term that I look at is the charts. If we break these big patterns to the upside, I think it's going to be on like Donkey Kong. I really do. And I think that the Federal Reserve is trying to stop this move. And I don't know. Maybe they'll be successful. Maybe they won't. I don't know. Maybe they're going to have to do QT to the max. They're going to overdo it. And then they have to print money. And then it just launches everything to the upside even more. So it's difficult to say what occurs in the short term. So focus on the big patterns. Focus on a time frame that encapsulates any sort of market movement in the short term and extends into the long term. And that's kind of how I view it. I hedge myself with time. But short term, guys, this does look good. This is great advice, says JC Parrots. If you have a losing position that is making you uncomfortable, the solution is very simple. Get out, says Paul Tudor Jones. So if you've overweighted something or you weighted something incorrectly and you've got a losing position and it's making you not be able to sleep at night, the solution is simple. Get out. Like, don't kill yourself over it. There has been some positions that I've put on where I've been a little uncomfortable. And a lot of those positions are the ones that I make a bunch of money on because I'm buying it when it's fear in the market. I'm buying it when a lot of people are fearful and are telling you it's a bad thing. And it's never good to enter put on a big position in something where everyone is around you is ultra uncomfortable. So I have done that and I will continue to do that. And I've gotten better and better with time, putting in larger positions at very good opportunities over the years. And I will continue to do that. And basically it's a form of confidence, a form of conviction that I think everyone needs to eventually get if you want to be a great investor. It's almost like I've seen this before. I've seen these people sell all this off. You see the fear in the markets. Everything puts this gigantic selling pressure move. You generally get a large wick at the bottom on a monthly candlestick or a weekly candlestick. And then as it comes back up, that's when you load into it. So you won't get the ultimate bottom of the bottom, but you'll notice and you can see on a shorter term time frame that you're putting in a downtrend line break, and then eventually it's going to be a gigantic wick at the bottom for a weekly or monthly candlestick. And then the fear subsides, money comes back into the market, people regain their senses, and it just rockets. But you got to have money for those times where fear is the greatest. And those are the greatest opportunities for anyone in the market to make outsized returns in very short periods of time. The chart construction represents massive accumulation by strong-handed buyers, and this is the industrials here. We can see the industrials moving, potentially moving on up. It says, look like the classic accumulation in industrials. The sector most correlated with the S&P 500 historically, a very diversified group of stocks. No single company represents more than 4% of the index. Industrials remain a leader, which is perfectly normal early in bull markets. Maybe we're already through the bear market. Maybe we're going to come out of it at some point soon. Don't know, but I know a lot of people are projecting worse in the future. The numbers that I see and a lot of the charts that I see are already at what I would say are very low numbers. So I think we could potentially be coming out of a recession, not going into one, which could be a possibility. That's why we're seeing iron ore break to the upside, and that's why we're seeing copper. Now, if copper breaks to the upside, that would be further evidence of maybe what I'm saying could be correct. Again, copper hasn't broken to the upside yet, but it is strengthening. And let's hope that it breaks to the upside. Redfin, nationwide, new listings are up 3% annually. The biggest increase in 2 years. Wait. New listings. So new listings are up. So we're going to see how this inventory, these new listings hitting the market, impacts inventory. It says that comes as some sellers notice the uptick in buyer demand. Some worry prices will fall. The others realize rates are unlikely to hit pandemic-era levels anytime soon. So we'll see how this reacts with the increased new listings and see if the inventory builds with the new listings. JC Parrots, he says, are you betting that one on the bottom isn't going to follow the one on the top? So this is technology XLK. It's a new all-time high that's breaking out of a resistance line of a cup and handle. Then we've got another NASDAQ 100 QQQ also doing what could be a cup and handle with a line. Now this one is the technical, the technical cup and handle, because you've got this resistance line going across pretty nice, but NASDAQ has it as well. Maybe we're coming out of the slowdown. Maybe that is what potentially is occurring. I don't know. Love to know what your guys' opinions are. Put it in the comments section. Are we coming out of a recession, or are we going to go into a recession? Why are the charts telling us that we could potentially be breaking to all-time highs? What's going on here? Why is there such a disconnect? Why is iron ore moving and breaking patterns to the upside? Why are we seeing strength across some of these markets? Uranium says something to stew on over the weekend. Solid week for uranium spot and equities. Cheers, friends. So Adam Go Rosen said uranium could go from $70 to $500. It sounds like the upper end continues to move, where Scott and I were projecting potential uranium prices. So over time, people originally told us that we were crazy. Uranium price at $500, $600, $700 is not attainable. We even threw out $1,000 price. But all of a sudden, everyone's kind of coming around to that price now. Like, wait a minute, how is this going to get solved with price? Because the time frame is just not beneficial to solve the uranium price in the time that we need it. So the price could run, and everyone's starting to come around to it. We've got the Kobayashi letter here. Auto loan and credit card interest rates just hit a new record high. The average interest rate, credit card 25%, used cars 14%, and new cars 10%. Meanwhile, we have record levels of debt. Total household debt, auto loans, and credit card debt. The worst part, interest payments on the $1.6 trillion of student loans restarted last month. If you want to buy a new home, car, and pay off student loans, it'll cost you $4,250 per month on average. The debt crisis is real. Could be. Meanwhile, India just reported record monthly imports of silver. This is pointing it out. Record monthly imports of silver. That is crazy. Look at that, guys. Look how much that is for India. So go India. I like silver. I do. I like platinum. I like all the metals, to be honest. Really do. It says, do you think credit scores are valuable? I think they are valuable to some people. They're valuable to obtain credit. So, yeah, credit scores are very valuable. Credit scores are also, they show a high correlation to IQ. Credit scores also show a high correlation to how good or how good of decisions drivers make. Credit scores are also related to SAT scores. It's all interconnected, guys, if you look at the data. So credit scores does tell something about a person, not everything, but it does tell something from a statistical relationship to making good decisions. XAU to gold, so this is gold to silver ratio. And look what we got here, a breakout to the downside where silver is ripping it to the downside. So we could see silver, if we can break and hold above $25 an ounce, I think we could see a big move up in silver. Big move. My uranium clip there. Real manufacturing, construction, and high-tech construction spending are both soaring. And I've showed that before with construction spending and all construction, all employees. It says, you tell me, do you think this screams recession? Neither do I. We've been saying all year this wasn't recessionary. Many followed polls and soft data. I'd rather follow the hard data. So manufacturing, construction, a breakout and room to grow to the upside. Look at the real computer, electronic, electrical, construction spending. Look at the spending there. Straight higher. So are we going to get a recession? It's a pretty mixed bag. I'll be honest, guys, I really don't know in the short term. It is a really difficult read. Generally speaking, if someone had to hold my feet to the fire, I'd say, why is all construction employees going up? That, in most cases, has to go lower for us to go into recession. Construction spending continues to go higher, and I just don't see that weakness coming from that. And I would say that is probably the most important data, is what we're looking at right in front of us here. If that continues to go up, it is very unlikely that we go into a recession. Generally, this falls over, and when it goes down, that is the higher chance that we could go into a recession. It doesn't mean you will 100%. It just means that there's a higher likelihood that we could. But with spending like this, it is hard for me to believe that we are going into recession with this much movement. And I hate to say it again, too, but if you look at these pricing, oil moves with this too. And if we've gone up this amount, I think oil might follow as well. An update on the structural undersupply of homes. Single-family permits edge up slightly in October, up 14% year over year. Single-family starts also tick higher, up 13.1% from a year ago. So our housing units continue to move up. And look at the housing units under construction for the total. This is your total units, and look how high it is. It's remaining elevated. The question is, are these going to result in transactions and loans? If it results in loans and they get sold, then that is credit coming into the system. And that credit is inflationary. And right now, I know the total sales volume is down. So you can go either way here, guys. It could go either way. A very tough call in the short term. I'm remaining long because this will eventually have to be purchased by people if they want to buy homes. If you want to buy homes, they got to increase the housing stock for everyone to get it. The affordability is what's holding people back. Totally agree. Copper hits its widest contango in at least 29 years, and that just means that the contracts out in the future are higher than the near term. Backwardation is when the near term is higher than the long term. So what does this mean? I don't know, guys, because you can see we were down here in 98, 99, and then we shot higher here. We also shot higher and we've come all the way back down in contango. Looks like we've got a broken trend line here to the downside. So it almost seems like it's a slowdown could potentially come, but tough to say. We've got all this data going in opposite directions. Construction spending versus contango and copper. What the heck's going on is really what it is. Nat gas demand continuing to rip it from week 40 onward. So we've got big natural gas demand. That's looking good. You can see the 2023 versus 2022 change. We've got greater natural gas demand on the right-hand side. Why is gold looking to be a great performer this decade? Here's some charts without commentary. I wanted to go over this. He's got some really good charts. Here's your big cup and handle, and a cup and handle is a continuation pattern. You go up in an uptrend, then you go into a consolidation pattern, which is a cup and a handle. And then we're breaking to the upside, hopefully here at some point soon. So that looks really good. Gold to silver ratio. There we are at a really high ratio. We can look over here. It hasn't broken to the downside yet on that. We've got gold to M2 money supply breaking to the upside. That looks good for a potential outperformance of gold in relationship to the M2 money supply. Gold versus Bank of America is breaking to the upside almost. It looks like we've got right at resistance, and we'll see if we can punch through that. And that generally occurs under an inflationary market condition. So this was inflation back here, the breakout, the retest, consolidation. And then we'll probably get another break. Gold versus US debt looks like that's ready to break to the upside as well, which would be a big breakout. Gold versus inflation, we've got another gigantic cup and handle, and then a handle on the cup and handle. We've got a dream within a dream. So a dream pattern, and then another dream pattern, and then a dream probably breaking this trend line if we can break to the upside there. We've got gold breaking out against the NASDAQ. So that's breaking out there of this falling wedge. That looks fantastic for gold. Gold versus the S&P 500 is about to break to the upside. That also looks fantastic. What this is telling us is that we are going to enter a very large inflationary period. That's really what this is saying. And gold outperforms in inflationary periods against financial assets. That could be currencies, bonds, S&P 500, stocks, whatever it is. But that's what it's suggesting. This outperformance of gold is also suggesting that energy and some of these other sectors that we follow are going to also outperform. And that's where I've got it. That's where we're going to end. So that's what I've got for today, guys. Give me a thumb up. Subscribe to the channel. Subscribe to the website. Use the word turkey in the coupon code. We've got a 5 p.m. Mountain Standard Time question and answer session coming up today, which is Sunday. And we'll see you there if you guys got questions. All right, guys. Catch you later. This is Finding Value.